It's July 22nd, JLD here, and welcome to MSTR today. Per usual, a lot going on in the MSTR universe. No exaggeration. You're going to have to strap on in. Nothing in this video is financial advice. Please do hit that like button, and let's dive on in to the first post from Chris, who says, hey, these are the weekly ATM proceeds. This is from the prior week. MSTR had $736 million in the weekly ATM proceeds. Strike, Strife, and Stride had 0.7, 0.2, and 0.3 respectively. You can see it was just a tiny, minute fraction of the week before when they blew it out of the water. So nobody knows exactly why this is the case, except possibly from Michael Saylor. They haven't come out and said their specific reasons or strategy behind this that I've seen, at least as of yet. If you've seen it, please post in the comments below. But hey, every now and then you've got to surprise the market. Every now and then you've got to take a breather. Every now and then you've got to adjust where you're siphoning your capital from. Is it going to be MSTR, Strike, Strife, or Stride? Or now, by the way, the next most exciting thing, which we won't talk about this very moment, because I want to just go through the summary of that MSTR SEC filing from last week. That was $736 million raised from MSTR at $452 per share on average. They still have $17 billion remaining on that. 0.7 on Strike at $128 per share on average. They still have $20.4 billion remaining. 0.2 on Strife at $100 per share on average. As Ragnar said, that really can't be the case because it never touched that low. So there's some number malfunction here, probably somewhere around $120, $123 per share. And that's a 1.88 billion capacity remaining. I actually am pretty curious what they're going to do when they run out of this 1.88 billion ATM. It'll be interesting to see. 3 million raised from Stride at $95 per share. That's 4 billion remaining. And so they raised just 3.9 million from prefers last week. It seems they're actively delevering their balance sheet to have even more capacity down the road. So a lot of interesting things going on here. I want to read point number 12 as well. That Strategy's leverage ratio, the debt to Bitcoin NAV, decreased from 16.5 down to, decreased to 16.5%. They still have 13.5% room to reach their maximum of 30%. Their pref to Bitcoin NAV ratio is just 5%, which is incredible. Well done, Saylor and team, says Ragnar. Thank you for this update, Ragnar. Thank you for the post. And Adrian wants us to know to have perspective and adjust your time preference. Every time he looks at MSTR, he still sees the pre-split price at $4,350 per share. Because again, Adrian's been investing in MSTR for multiple years now. So he remembers the pre-10-for-1 split. So if it never did that split, Strategy would be trading at $4,350 per share, which is insane. Strategy came out with the big news of the week for sure, because it seems like they come out with big news at least once a week. They're now offering Stretch, STRC, which is a new perpetual preferred stock via IPO to select investors. This is a 20-minute presentation by Phong Lee and Michael Saylor. I just want to step back and say this right now. If you watch this presentation and you are not incredibly excited about being an MSTR equity holder at the end, please sell your stock because you don't get it. You don't appreciate the fact that Phong Lee and Michael Saylor are cooking for us. If you're putting in the comments some whining message about how Saylor hit the ATM last week and it's depressed the share price by a couple dollars, you don't get it. You don't understand what Strategy is doing. They are not looking to maximize the share price today, tomorrow, next week, next month, but 4 years from now, 10 years from now, 20 years from now. Watch out, because Michael Saylor knows this is the Bitcoin digital gold rush. We have less than 10 years left to mine 99.9% of the Bitcoin, and then it's essentially all gone. People are going to be fighting over the 0.1 scraps that's going to be mined for the rest of eternity, essentially. So it's a gold rush. Michael Saylor is doing everything he can now to acquire as much Bitcoin as he can now. These perpetual preferred stocks are absolutely amazing if you take the time to sit down and understand and wrap your head around what they're doing. So please listen to this presentation and please be excited about it, because if you're not, again, reevaluate your investments. I've got a great visual that I want to show you right now, actually. Really love this from AC. So if you kind of scroll down here, you see here's Bitcoin, $2 trillion. What is Strategy doing? Well, they've dropped a siphon line into the equities, which is this blue rectangle here, which is $115 trillion. And what is MSTR doing? It is siphoning money from equities and putting it directly into Bitcoin, of course, under the Strategy umbrella for MSTR shareholders. What has it also done? Well, it's dropped another siphon line into bonds, which is $300 trillion. And they are siphoning with Strife, with Stride, and with Strike, and with potentially more down the road. Only time will tell what their plans are for this $300 trillion bond market. And now, what have they done next? Stretch, they dropped a siphon line into the money market, the $120 million money markets, where people are just keeping their money for short-term durations. They are siphoning money out of this. I mean, what do I see next? I see a big $330 trillion real estate. Is Michael Saylor going to touch that? I don't know. I'm sure he's having conversations with AI right now to see how he can, to see if he should, to see how he should. But guess what? Right now, MSTR siphoning from equities, $115 trillion. Strife, Stride, and Strike siphoning from bonds, $300 trillion. Stretch siphoning from the money markets, $120 trillion. I think Saylor's cooking. So Chris says, Stretch product summary. It's a perpetual preferred stock. It's third in the capital stack. It's below Strife. So of course you have the convertible bonds, then Strife, and then Stretch. And as they promised, Strife will always be the crown jewel. Strife will always be the top of the capital stack when it comes to these preferred stocks. And that's why I love and I own Strife personally. I feel very comfortable with essentially all of my free cash in there. High yield, super collateralized, variable monthly dividends starting at 9%. So this is different. It's monthly dividends starting at 9%. So you can get paid out monthly instead of quarterly. And Michael Saylor in the presentation did make the comment that there are a lot of people, especially when it comes to the money market crowd, which is who he's going after here, who like the monthly payouts, because a lot of people run their life month to month with the monthly bills. Dividends are cumulative, so that's amazing. So they will be cumulative if there's any that are missed, which of course I'll be shocked if that even ever becomes a conversation. So they're targeting money market funds and short duration risk averse investors seeking predictable income, stable value, and downside protection. So what is this? It's perpetual, it's investment grade, it's money market, it's risk avoidant, it's 10x Bitcoin rating, which means very over collateralized. Regular dividends, which are cumulative, 9% at par value of $100. Cash only is the dividend payments. There's no Bitcoin upside. It's the lowest vol profile. It's low risk profile, and it's above Strike but below Strife in the priority and liquidation. So essentially, if you watch this presentation, you'll see Michael Saylor's goal is to keep Stretch at around $100. So they want to keep it right at par, and they have levers to pull if it starts going above it too much. And they have levers to pull if it starts going below it too much. So it's really interesting. They've just created another, in my opinion, fantastic instrument. And now the 5TM is in full effect and they are kicking. So Adam says, who's Stretch perfect for? The capital that's done being bored and broke. T-bill refugees earning 4% with no upside. Bank depositors tired of 0% yield and 100% inflation. Credit funds that want Bitcoin exposure without equity risk. Institutions seeking monthly income with par stability. Anyone who wants Bitcoin-backed cash flow, not casino volatility. Strike is a stable cash machine for intelligent allocators. It's a stable cash machine. And Jeff Walton says, feels like the excitement around preferred equity has 100x in the last 6 months, rightfully so. World-changing innovation at breakneck speed. It's insane what Michael Saylor and the strategy team have done around preferred equity. It's so exciting to be a part of this. And Jeff says, winter's not coming back. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher. And again, this is a quote from Michael Saylor from a month ago. The quintuple threat. That's 5 threat ATM with the launch of Stretch. Strategy fully taught to capitalize on all market conditions. So incredibly exciting times. And we will actually get to hear that audio coming up here shortly. Um, Adrian says MSTR strike, strife, stride, stretch. At first glance, here's why I'm fairly excited about the new stretch preferred offering. It's less risk capital erosion on a per share basis than any other monthly offerings in the market. It won't tank as much during a prolonged bear market, not dependent on IV. Less volatile by design. It's collateralized Bitcoin. Dividend expected to be 9% per year. It won't pay out from return on capital. Not likely to face concerns around long-term viability. No outsourcing of risk. Will serve a much larger investment base. Easier for a common investor to understand. Potentially an excellent place to park capital / gains. He's just spitballing his ideas as they come to mind. Not saying this is 100% the case. He's just saying. And I love this post from Mason. Shorts are, and then it's strife, strike, strike, and stride. So stretch, strike, and stride. So we've got now shorts are FCKD. Oh man, looks like we've got a U and an E coming out from Michael Saylor as he continues to play this game. And I did do a amazing investment of MSTR yesterday. I bought 0.486 share of MSTR at $433. My total investment is now well north just for this year of dollar cost averaging every single day, $20,000, $25,000 for the year. With a nice little profit on that as well. I'll give you the full portfolio coming up here on Sunday. And we have some great video clips coming up for you. So sit back, relax, and please enjoy. When it comes to my assets, diversification is key. I don't want to be over leveraged in any one thing. I mean, yes, I own MSTR and it makes up a large part of my portfolio, but I also own Bitcoin and always will. And now, thanks to my new sponsor, BitIRA, you can own Bitcoin in a tax-sheltered retirement account. BitIRA has been around for almost 10 years. As one of the trailblazers in alternative IRAs for crypto, they have built the world's most secure digital IRA. Here's why you'll love them. End-to-end insurance, highly secure storage, multi-encryption, and registered with the US government. And it's fully IRS compliant. If you have a 401k from an old employer or an IRA gathering dust and you'd rather have that retirement account converted to an IRA in Bitcoin, BitIRA will help you convert it free of taxes or penalties. Best of all, you can trade crypto within your retirement account without taxes incurred on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Again, that's bitira.com/JLD to open a tax-sheltered IRA in Bitcoin.
Winter's not coming back. We're past that. We're past that phase. If Bitcoin's not going to zero, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Ken Tez at CFTC feels the same way. The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers. That's the miners. At this level, that works out to about $50 million of Bitcoin available for sale every day. If that $50 million is bought, then the price has got to move up to find any seller that's price sensitive. Now, if you do the math, you'll actually see the Bitcoin treasury companies by themselves are buying the entire natural supply.
Yeah.
BlackRock and the ETFs are buying another measure of that. And we've got nation state actors coming into the space. So I think when Bitcoin rallies, if it surges to 500,000 or $1 million, then maybe we could talk about it crashing down by $200,000 a coin. But at the current price levels, it only takes $50 million to turn the entire drive shaft of the crypto economy one turn. And you've got the Trump media organization announcing
Right.
$2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher. I were to say it ought to be twice as performant as the next best thing, that wouldn't be unreasonable. My forecast is it's probably 50% better.
maybe 60, 70% better than the next best thing. So my long-term forecast is like 21% ARR and 21 vol. And I would say, the S&P will be more like 10% ARR, 15 vol. Bitcoin's going to have the higher Sharpe ratio. Bitcoin's going to have the higher vol. Bitcoin's going to have the higher performance because it's engineered and it's accessible. There's going to be someone in a country doing something with capital that you don't understand, that's illegal in your country, that's going to make you money, right? Right? The redneck in Arkansas with Bitcoin buried in their backyard is going to make money off of some rocket scientist in Singapore or Beijing doing something with some capital they've never heard of in a way they can't understand, that's either illegal, and they'll be doing it while the guy in Arkansas is sleeping. But the dude in Arkansas is making money. So this is the highest common denominator. Whereas, an American company that owns stuff in Arkansas is not getting its value increased by some Chinese actor, right? Or there's no nation state central banker that's going to do something to enhance your Arkansas strip mall or your whatever best idea. So that is the basis of my assumptions about the long-term performance of Bitcoin.
What's the second best? There is no second best.